Good morning, Chris. It's January 2023. Happy New Year.
Happy New Year, Rob. Indeed, and to everybody else as well. My goodness, where has it come? Suddenly it's 2023. We're thinking about prospects for the new year, but as always, I think ultimately we had an interesting 2022. It was different, certainly, but in a way, I think we're probably glad that that year is over and we've started a new one with all the opportunities and hopes that that brings.
Yeah, absolutely. If we start on that basis, then 2022, really turbulent year, lots of different challenges and headwinds thrown at investors, and overall world markets, 20-ish% down, give or take.
That's right. They were. But it's funny, isn't it? The FTSE 100 here in the UK was positive because of its large amount of energy and mining stocks and everything else. So that did well. But you're right, the average global stock market was negative. The big surprise, of course, was bond markets. Bond markets, which normally the things that perform when equities don't, were even worse in many cases, which was kind of interesting. The only things that really worked, I guess, was you could have had cash in the bank, but you wouldn't have beaten inflation, unfortunately. Gold did okay, but wasn't marvelous, but at least was slightly positive, particularly when you think about it in dollar terms. And I guess thinking about the dollar, that probably was the performer of 2022. The dollar did well, although it started to sort of slide down a little bit over recent weeks. I guess the really key thing to avoid, of course, was Bitcoin or anything like that, anything so super complex that probably you and I don't really understand it, but that did terribly. So probably a good thing that we didn't really understand it.
Yeah, absolutely. And I think property had a bit of a hard time as well, Chris. I know a lot of property funds were gated, and which meant that investors couldn't get their money out of those investments. So that was also a negative of the year. But yeah, I think the big shocker, generally speaking, with clients has been the bond market. And I read this morning around a third of the value of bonds was sort of wiped out during 2022. Hopefully we'll start to get some of that recovery coming through. But yeah, certainly for that typical cautious investor that has more bonds typically because they're considered historically lower risk, really were a shocker for us.
It was. And the thing with bonds, of course, is that the good news is that very, very, very few governments around the world went bankrupt. So even if you had bonds in the UK or Europe or America or other major sort of country parts of the world, they at least still exist. But they did underperform. My guess is, though, that bonds still do play a role in people's diversified portfolios. But I think everyone's learning, I think you and I have talked about this many times before over the last few years, that actually having a lot of your money in either cash or bonds, actually, for the average investor, irrespective of if you're young or a little bit been around for a few years, doesn't make sense. And it is wise to always have exposure, decent amounts of exposure to equities or other areas of the economy which are still potentially growing. And bonds, of course, whilst the governments aren't going bust, they are going to give you some kind of dividend yield and related. Unfortunately, for it to regularly beat inflation, I'm afraid, is going to be tough. And it's not that I worry too much about inflation over the rest of the 2020s. I think, fortunately, we've probably seen the worst of that already, and it will become less problematic. But nevertheless, as any of us who've lived around the 1980s and the 1990s, let alone the 1970s, knows, inflation is always there somewhere quietly. And I think people for much of the 2010s forgot that it existed, but it was always there. And so having inflation of 2, 3, 4%, I'm afraid is going to be a reality out there. So bonds may sort of protect your money, may lower your volatility, may make you an investor who still performs at a certain level. Overall, I think equity still is the place to be for the longer term investor. That is still probably the most important part of your portfolio, the thing that will add you value and related over the decades of your totality of your investing life and related. And of course, equities is not just the companies that we see in the high street or we read about in the newspapers. It could be many other things as well. I mean, things like infrastructure, for example, something which is so important for the world, the rise of certain green elements as well. It's not that whether it makes sort of climate change disappear or something, but there's so many relevant factors around that broader picture, which are still super important for anybody's investment portfolio, and hence how your pension should be focused. So diversification always is the key. That, I think people have learned that a lot more over recent years, something we've always thought about as a really important factor, but its relevance for the 2020s is absolutely huge. And that's why I'm not too pessimistic about the rest of this decade. There are still clearly opportunities out there. You've just got to pick and choose carefully. As always, it isn't wise to have a little bit of everything. You've got to pick and choose your investments carefully. And that's where obviously investment advisors, people like yourself, Rob, can help people an awful lot.
Well, we can only try, Chris. On that point, though, about inflation, I suppose let's talk about some of the positives then. We are in a new year. There's a new opportunity to do new things. 2023, let's hope, is a more positive year than last year, although we don't have a crystal ball, and I do keep checking that there's not one in the office. But inflation does seem to have cooled off. And there's been reports both in Europe and the US that it's dropped a bit lower than the markets were expecting, which is always good. But then the counter's always been, well, central banks are still going to put interest rates up, and then that cools off the markets again. But I do see that inflation is starting to get under control a little bit better. There are certainly strong signs that the labour market is still doing okay. Companies seem to be still at a reasonable level. Balance sheets seem to be in a positive. We're not seeing mass redundancies and companies going bust that you would typically see in a hard recession. Would you say that that's maybe a fair assessment, Chris, then, that we're maybe looking at a softer recession and that there are some positives for investors to look forward to?
I think that's right, Rob. I mean, unfortunately, my feeling is that the world central banks are likely to raise interest rates over the next 2 or 3 months still. So I'm afraid to say the Bank of England is going to raise interest rates again this year, probably more than once. But the good news is, as you say, is that inflation is starting to come down. There's still going to be inflation. I'm afraid prices aren't going to miraculously go down everywhere. There's still going to be a bit of inflation, but by the time we get to the end of the year, we'll see modest inflation back down to more the levels that we're kind of more used to. We will therefore also see central banks deciding to stop raising interest rates. And my guess is by the end of 2023, central banks will be deciding what is the timing for them to start reducing interest rates again. Now, this is fairly normal. We're not sort of moving back to that miraculous but clearly implausible world of the 2010s where interest rates were almost next to nothing. We're not going back to that, but we're having what I would call common sense of policy making, which is reacting to the underlying reality out there. So I guess what I'm thinking is, whilst we will have some recession, arguably we've already seen recession here in the UK, whilst that is apparent in the States, in the UK, across Europe and other parts of the world, the markets fortunately always look forward. And when we think about the fact that they're well aware of all of these challenges and risks and fears, my feeling is the prospects for investors for 2023 are actually not that bad. In fact, I would much rather have my money in a nice diversified range of investments than I would under my bed or something, because that's always the smarter way to be an investor for your pension fund or related medium-term obligations. So yeah, lots of opportunities out there still lots of challenges. But as you say, I'm glad to see employment is still moving in the right direction. I think that's good. My guess is actually weirdly China moving away from its sort of COVID lockdown kind of situation is also good for the global economy. I see that as positive. And whilst we've still got challenges with debts, with concerns, with people worried about the implications of some of the changes that we've seen and challenges that we've had, I will say 2023 is a year of still opportunity for investors. And the worst thing you can probably do is say, right, forget it, let's move away, put all the money under the bed and put the sort of hide and not do anything. I think reality is you've got to remain involved as an investor. That is half the battle, really.
Great. Last quick question, Chris, before we wrap up on our January monthly roundup is this: are we going to see a new Prime Minister this year?
We probably saw too many over the last year in reality, didn't we? My guess is no. I say that for two reasons. First is that I think the election, when it next comes in the UK, will be in the thick end of a couple of years' time. I think that's almost inevitable. Second, do I think the current government will look to change the Prime Minister? I think probably not, because I think they've learnt in different ways over the last 6 months that keeping on picking and choosing different people causes problems. And I think sometimes you've just got to stick with what you've got, try and make your plans and prospects work. And if they don't work, well, the next election is the perfect opportunity for people to change their minds and views on things. So we shall see. So my guess is no. And on that basis, I'm also thinking that the pound is also going to go up. So if you're thinking of going on holiday or related to the States or to Europe or somewhere else in the world where the weak pound over the last year or so has made any holidays a bit more expensive, my guess is the pound will actually go up in 2023 against things like the dollar. But as always, we shall see.
But no, that's great. Well, thanks, Chris. Thanks for the roundup. And it's going to be February when we're next having a chat, and I'm sure it'll be in no time.
Indeed, absolutely. And Happy New Year again to everybody.